Yes. So one of the things that came up was, from an expectations point of view, is inventory management. Uh, Before we even get to that, let's just talk about what types of inventory one has in any business or any supply chain. You've got raw materials and components. You've got work in progress, which is things that are in the middle of a manufacturing process. And then you got the finished goods, which you and I go and buy from the stores, for example. Okay. However, my question is, what are the other types of inventory that you have in your organization? Right. And my question is, if your guys maybe work in different organizations, just by the way, every organization has inventory of some type. You also got inventory in your homes, in your houses. So my question, and I'm going to give you 30 seconds to put one or two thoughts on the chat or to unmute yourself on these types of questions. What are the other types of inventory you have in your organization? And what are the inventory you have in your home? So the clock starts now.
The type of inventory will vary when it comes to the organization. Like, it depends on what types of products they sell or supply to other people.
Yeah, agreed. You want to give me an example, maybe in your particular type of organization? If you're not able to share for whatever reason, then maybe even in your home, what type of inventory do you have in your home?
Rice, sugar.
Yeah.
Butter.
Now, just by the way, guys, that will fall under the raw material component. Yeah. Anyone else?
So when it comes to organizations, it depends on the organization. Like, let's take, for example, ShopRite. ShopRite, they provide goods to the public, so their inventory will obviously be the products they sell, like the food stuff. It really depends.
Okay, cool. No, thank you. I heard someone else wanting to say something. Please go.
Yeah, I was saying, like, where I'm coming from, we stock things like stationery. We have maybe on the raw side of material, we have a steel bus, and in between work in progress, things like electrical appliances, the things that we use in the construction of maybe of a house, switches, sockets,
Okay.
and the like.
Okay. Cool. Thank you. Good. Excellent. So just to use now that as an example, so I'm going to use the rice, for example. So you bought it into your home, or let's assume it's not your home, it's a restaurant. Okay. When you bought the rice, it's a raw material, and it could have been eggs and sugar and a whole bunch of other things. When your chef is busy cooking and it's sitting on the stove whilst they go and do something else, that's work in progress. Okay. And then when they finish it and put it on the plate or on the shelf, that's your finished goods. Right? In your home, for example, if you got eggs, okay, that's your raw material. What's your warehouse for that? Your fridge. Okay. When you now want to bake something and you take all the ingredients out and you put it in your factory, which is now your kitchen table, and you start breaking the eggs and mixing flour and doing all those things, that's your work in progress. And when you've finished it, after it's gone in the oven, it's sat there, it now comes out, and you pack it into little containers ready to be delivered to whoever, that's your finished goods. Okay. And that's how that converts through the supply chain. But we do know that there's other types of inventory. And Vegas, I think you mentioned it in terms of work in progress as well. And you said things like switches, etc. Now, all the equipment that we have to keep also breaks. So my fridge might break. My stove or oven might break. I need to fix it, which means I need to keep spares, extra switches, extra electrical wire, whatever the case might be. So you get inventory, that's your engineering spares, etc. Right? If you think about, if you're a mechanic and you got a garage, your inventory to fix some of your equipment is also engineering spares or tools. Okay. Someone mentioned stationery. So that could be other forms of inventory. Even if you're in a manufacturing environment or you got a warehouse, you still buy stationery. So that's part of your inventory. Your safety equipment that you buy, hard hats, masks, that's inventory. So there's lots of different types of inventory as well that you get in any business. The one thing I want to just sort of highlight for those that sits in a service industry, because you might be there saying, hang on, we don't have a factory, we don't have a warehouse, so is it really applicable? Do we really have a supply chain in a bank? And the simple answer is yes. Okay, because think about this. We said, and I'm gonna do this. So we said you've got raw material. It goes into a factory. That goes then into a warehouse. We transport it. It goes to, I'm just going to use Checkers as an example, and then it goes to a consumer. Okay. Now that's sort of the typical supply chain. Now let's take a service industry, right? Like a bank. What's your raw material? It's let's call it simplistically paper. You've got your banker sitting there. Okay, they don't have a factory, but then when the consumer comes into the bank, like you and I, we go into the bank, right? And we decide, okay, we want to go to the ATM. Now the ATM processes our request, and then it gives us cash. Now that ATM, is that ATM not a combination of a factory? Because you put in a request and it processed it and it gave it to you. Is it not also a warehouse because it stored the money? Part of the process is it had to print out your balance and give it to you. And then you as a consumer got your cash. So it's the same thing. It's the same supply chain aspects that's relevant to everything, except in some cases, instead of delivering, like in this case, it's delivered a product to you. If you went into the bank to open up an account, they delivered a service to you. But everything that goes into that service does follow this sort of process in terms of raw material, in terms of the banker processing it, in terms of them generating a card for you. All of it still requires a supply chain. Yeah, it still requires warehousing and distribution. It still requires some sort of inventory. You know, even if the inventory is your ATM blank cards, it's still inventory. It could be that special type of paper that they make you sign. It's still inventory. So supply chains then are very, very relevant across manufacturing and service type organizations. So you could be anywhere. You could be a specialist HR company. You could be a financial house. You could be a bank. You could be a post office. They all require a supply chain to deliver either a product or a service. Okay, so that's quite important to remember. Sorry, Chuma, let's see, there's a. Okay. So now we come to the ABC classification of stock. And by now I'm hoping this is actually like a test to see if you all listened previously. Why is this important? So why is classifying stock important? And in this particular case, ABC classification basically means I got products that I call A, B, or C. My A products contribute the biggest percentage of sales and turnover to my business. So 20% of my stock gives me 80% of my income. And that's sort of the ABC classification, which is also called Pareto analysis, by the way. So my question oops, sorry, to your guys is why is that important? Why is understanding Pareto or ABC classification of stock important? And I want you to think back to what we spoke about warehousing. Even the Fiona example, some of your guys mentioned it. So I'm going to pause for 30 seconds. If you guys can either unmute yourself. Vegas, yes.
Yes, I think we need to understand that if we're running a business and that task, we have to run it profitable, because if we don't take control of what type of stock we are having and in relation to how much it's costing the organization, you end up tying sometimes capital in things that are not fast moving in relation to the things that should be core to the business. For example, if let's say I'm running a coffee shop, I think I should look at first the sugar, maybe the coffee and the cups, but maybe for the serviettes, they don't fall much into the daily my daily sales. If those things were to be delay a bit, they won't so much affect my business in as compared to, say, if I ran out of coffee. So I think that's where I'm trying to put my answer.
Yeah. No, well done. Thank you. Thank you for that, Vegas. Anybody else wanna come in before I take this a little bit further? No. Okay. Cool. So Vegas, spot on. That's definitely one element of it, because to summarize what Vegas said is not all products, all materials are equal. So the amount of money you're making in your coffee shop from the coffee versus serviettes is very different. The amount of serviettes you use versus the amount of coffee or sugar that you use is different. So you want to keep what you need as close to you as possible, and what you don't need a little further. So I want you to just think back to the warehouse layout. We said the inventory that you use the most often, or that customers want the most, like someone used the word current books, right? In Fiona's example, you keep closest to you in terms of warehouse location, but also inside the warehouse. Okay. And it's the same if you think about your fridge at home. Okay, the stuff you need the most, like maybe the milk and the eggs, etc., is right at the entrance. When you open the door, it's there. The stuff that you don't need so often is maybe at the back of the fridge, because you need that once a week. The other stuff is every day. Okay, and the important thing about why we want to understand this is, and Vegas mentioned it nicely, he said the cost in relation to the profit. And when we spoke about the Fiona's warehousing example, we spoke about the return on investment, I think we said, and we said the cost to serve versus the benefit, I think is what Asisipo said. So you can see how all of this ties in with inventory management, with warehousing, and how we manage the stock. And before we decide how we want to manage the stock, we have to know what we're dealing with. And that classification system is what the ABC classification helps us to do. And once we understand it, then we know how we're going to deal with the product. And it could be a finished goods, or it could be a raw material, for example. So if you take, you walk into a Checkers, okay, you will notice that your ACE classified stock, so in other words, the stock that sells more than others, will have lots of shelf space. But that no-name brand, or that brand that's not so well known, won't have so much shelf space. They'll have that much. Why? Because it's considered a B or a C stock. But the A stock, they'll make sure it's in front of you as a consumer. That is why, by the way, the A stock will always be eye level, in line with your what you can see, but not too high and not too low. Your C items will be at the top and right at the bottom. So you can see how classification helps people make different decisions within their business. Like Vegas gave his coffee shop example, it could be applied anywhere.